News Radio 700 WLW.
Well, this country is in a world of hurt. We know that. All you have to do is just drive down the street, if you got enough gas in your car to do that, and just look at prices everywhere. Inflation is just smacking us around. It is a tax on everybody, but most important, it is a tax on lower income and middle income families. Joe Biden, he can say it. I did that. And it all begins with his war on fossil fuel. It was ideology that got him in the White House. He partnered with the Green New Deal crowd. And, of course, what they want is no fossil fuel anytime, anywhere, anything, anybody, anyone, anytime soon. And because of that, diesel fuel prices are up and trucking companies are paying more to get goods to you, if indeed they can. And when they get it to you, guess who pays more for those diesel prices? You do. And then when you get in your car to go to work, you may look at it and say, wait a minute, I'm only making so much an hour. Can I really afford to go from my home to where I work? Is it really worth it? Grief to dollars. And it's only going to get worse. We're approaching Memorial Day. July 4th is coming up, and then a long, hot summer. And guess what? It really hasn't cut down on what we want to do. It's all supply and demand, and apparently demand has not gone down. Supply has gone up, at least in price. What's going on here? Let's bring in somebody that knows the fossil fuel industry very, very well. He is in his fourth generation of running a company that is deep in the heart of Texas. He knows all about getting oil out of the ground and getting it to refineries and getting it into your gas tank. He is our good buddy, Jay Young. Jay, how are you on this glorious day?
I'm doing great, Ken. I feel better than I sound. I've got some after effect of allergies or something, so hang with me. I'm here.
No, I know that. Now, Jay is also the author of The Upside of Oil and Gas Investing. All right, last I saw, a barrel of crude in Texas, and I think these are Thursday numbers, but I may be off on those numbers just a little bit now as we sit here on this day. But I'm looking at a barrel of crude right now is firmly above $100. Am I right?
That is absolutely correct. 100% correct, and it's not going to get any better anytime soon.
And at the beginning of this year, just a few months ago, it was about $75. About a year ago, it was $63 a barrel. Why is the price of a barrel of crude going up?
And Ken, a year before that, it was like minus 37. Remember that? Mm-hmm. that was a weird situation. It won't happen again. Well, it didn't happen for a very long time. But what's happening in the world right now, Ken, we talked about is supply and demand. I mean, it's like right now we are not putting rigs back to work, and we're not drilling for oil and gas where our demand is. It's all about supply and demand. That's where the price of oil is. Somebody the other day said, well, why are you guys jacking up the prices of oil and gas? And I said, I'm sorry, what? Yeah, what do you think that I'm jacking up the price of oil and gas? No, that's not me. It's all about supply and demand. It's all about, during the bad times, we would love to have jacked it up when it was $15 or minus $37 a barrel. Right now, we need to be drilling for oil in the United States, and we simply aren't. Mm-hmm. And there's three reasons why we're not. The government is not doing us any favors, federal and state. Number two, public companies aren't drilling. They're not back together yet. And I say yet because I've been at some conferences lately and reading a lot, and I believe that they're going to start coming back. And number three is big, huge private institutions, people that have hundreds of billions of dollars, like your Blackstones and endowments and people that have tons of money. They aren't investing yet because they put hundreds of billions of dollars back there in 2012, 13, 14, and then in 2018, they got a little stung.
Yeah.
So they're saying no. But when prices stay above, and I say 100, let's just say if they stay above $60 a barrel for a long period of time, they're going to come back in. And people are itching to come back in at $100 a barrel because the economics look so much better. And there's money to be made when you're drilling for oil. Mm-hmm. and you're getting $100 a barrel that you just can't. What was that guy on the Sopranos? It's like you kick me out, but you suck me back in, or whatever it is. I mean, that's what's going to happen because people love good investments, and at $100, $120, or I mean, was it Goldman Sachs has said 135 this year, maybe this summer? J.P. Morgan has said 180. There's hedge funds that are saying $200 a barrel. Now, personally, I don't think we're going to go that far. Personally, but if we did, it wouldn't be for a long period of time.
Well, let's just say Goldman Sachs is right. Let's say Goldman Sachs is right. Okay, what does that mean for me at the pump? What does that mean for me at the pump who's paying about $4.60 a gallon right now?
Yeah, it's going to be $6.60. It's going to be $7. It's going to go up because that's what happens is when back during the pandemic, we quit drilling for oil, 100%, right? Mm-hmm. We just quit drilling for oil. Right. And all of a sudden, the government started stepping in and saying, okay, well, we don't need the Keystone Pipeline. So they're hurting the consumer at the pump saying, we don't want you to drive anymore, I guess. I don't know. They don't want you to they don't want you to consume all the things necessary to, drive to work, or I don't know what they were thinking, but they were thinking that if you hurt, then you wouldn't do as much. And then if you wouldn't do as much, then your demand would go down. But that's not happening.
Yeah. My theory on that, Jay, was that they wanted to raise the minimum wage. And they wanted to raise the minimum wage, and they couldn't. They were blocked. They couldn't raise it to where they wanted it to go, minimum 15, but more like 20 or 25. And so they would make it more expensive for people to drive to work. They wouldn't go to work. Employers would say, wait a minute, now we got to pay you more so you can put gasoline in your car. Now, that might seem conspiracy theorist, but I think all of this is tied up. Let me ask you about your contention here about people wanting to get in and invest in oil production if it's going to $120, $150, $180 a barrel. We're buying oil right now, or apparently we're attempting to buy oil from one of the most corrupt regimes in the history of the world, and that's Venezuela. Now, why would the government want to see more people get involved in oil investing and drilling here, knowing how difficult it is to drill here anyway? They would probably short-circuit that trying to buy oil from either OPEC or Venezuela or someplace else, because the people that put Biden in office don't want to drill on domestic soil. They don't want it. They want it completely outlawed. So it becomes something that somebody really is lucrative for investing in. I think they'll just turn around and try to buy more oil from Venezuela or OPEC. Your thoughts?
Yeah, there's been some public companies. I listened to the guy from Conoco the other day speak in Fort Worth, and he was talking about they're opening up now negotiations with Venezuela. Oh my gosh!
That's right.
But the government's too stop, start. It's like we don't want any oil and gas ever. We don't want anybody to drill for oil and gas. We don't want to use it. We want to go green. We don't want this oil thing going on and trucks and environments and all that. Which, hey, I get it. We do everything we can inside our company, King Operating, to do the same. And I get it. Let's just do natural gas, but whatever you do, whatever you say, that doesn't mean that we don't need oil and gas. That means that just because you say it or believe it, that doesn't mean that it's going to happen. Our demand is still going up, and it's still going to be strong. I mean, that's what Scott Sheffield from Pioneer Natural Resources, they're the biggest oil and gas producer in the Permian Basin. Mm-hmm. And he's the CEO, and it said, he said it's going to stay up for a long time. We're not going to go, green and not use this. But when you get oil from Venezuela or Russia, that's a real hard. It's a dirty mix of oil. It's a different type of mix of oil than we can produce here in the Permian Basin, let's say.
Yeah.
So we need that kind of oil.
There's a guy. He's a partner at a place called Again Capital, John Kilduff. He said $5 national average in the cards between Memorial Day and 4th of July. His theory is it appears that average needs to go higher because in the last week we saw gasoline demand shoot up. people got a lot of cash, sitting on cash because they couldn't do anything during the pandemic. It is a strong labor market, despite the fact that there are so many unfilled jobs, which means, bottom line, people will pay what they need to pay to get where they got to go. And as long as people are willing to do that, as long as there's no something that's greater than, gee, these gas prices are higher, they're just going to keep going higher, right? I mean, the only way this stuff goes down is if the population as a whole says, enough, we're not going to drive our cars anymore. And you and I both know that's not going to happen.
Right. And there's going to be another 2 billion people on this planet in the next 10 years. So there's more demand that's going to happen, even though cars, yeah, we're going to have electric cars, which, I mean, there's a lot of oil and gas that needs to build those cars and the roads and all that. Because we've talked about this before. I mean, 60% of the barrel of oil is only used for products other than, planes, trains, and automobiles, or gasoline, if you will. So there's a lot of things in oil. So we're not going to be done anytime soon. But I'm going to tell you is that when we do get to 100, 120, 140, and people see it, if it goes to 160, I mean, man, our investors are going to be really happy, obviously.
No doubt about that. Jay Young is our guest. This guy knows the oil and gas industry inside out. He's with King Operating Company. He's the author of the book, The Upside of Oil and Gas Investing. Hey, Jay, we're talking about the consumer end of this. I want to talk about the commercial end of this. Diesel prices are ridiculous, and it's all part of this inflation. Somebody's got a trucking company, and they got to get diesel in their tanks, and that price of diesel is just going up and up and up. 76% up over what it was last year. Now, who do you think is going to pay for that? Because the guy putting with the trucks that has to put that in his tank, eventually that cost is going to get passed on to you and to me because it costs more to buy the goods that they're delivering. Oh, wait a minute. Go to any grocery store right now and you'll see evidence of it. Diesel is as much a problem as the consumer end of this oil crisis. Am I right on this?
Oh, absolutely. But, the world goes in cycles. I mean, real estate or the stock market or oil and gas, and us older guys, we can say that because we've been through so many cycles, and it will. I mean, it will. It'll go up. It'll go up, and then all of a sudden people are going to go, wow, wait a minute. I mean, let's go to drilling. Let's get to OPEC and let's get this whole thing situated. And let's make sure that everybody's happy.
That's not what Biden wants. He wants it to go so damn high, people are going to say, yeah, I'll pay $60,000 for that electric car. And then when it only goes 120 miles and it dies, we're all going to say, what the hell just happened? I've had this conversation before. It's an ideology in Washington that doesn't intersect with a reality here in God's country, in the heartland of America. And it's, until and if, it seems to me the goal of the folks that are in power right now are to make it as painful as possible for us to do anything that will eventually succumb and just become enslaved to their philosophy. I think that's what's going on right here, and I don't think it's going to have the ending that they want, because I think a vast majority of them are going to be on the street come November.
Right. I mean, you're right. I know it's Jimmy Carter and Joe Biden. I think they were born from the same mold or something. But yes, I mean, talking about politics, talking about demand, and talking about what people really need and making good decisions, that's hard. I mean, I say it's hard. It's not hard. It's hard to make those decisions because you make all these promises to be elected, and all of a sudden you're like, oh, wait a minute, we did need the Keystone Pipeline. Oh, that would have been a great idea. Oh, wait a minute. Maybe we should have been drilling because during Trump, he said drill, baby, drill, and we had $2 gas at the pumps. Oh, bingo. Wow. Yeah. Wonder what happened.
Yeah, well, I know what happened. I'll tell you what happened is it all happened in South Carolina right before that primary when they had a come to Jesus meeting with everybody who was running for president saying, look, none of you people can get elected. Joe Biden is going to be our guy. Put everything in that empty vessel, and he'll deliver it like a Trojan horse. That's what happened. And that's why we are in the position that we are in right now. There's nobody, Jay, that can argue that any of this stuff is working. None of it's working. Anyway, we got to go.
Right.
Buy Jay's book, The Upside of Oil and Gas Investing. You can find him at kingoperating.com. He's our guy. Jay, stay well. We need to hear your voice. Thanks, man. We appreciate it.
I love it. Ken, thanks a lot. I appreciate you. It's always great talking to you and your guests. I appreciate it. Call me anytime.
There he is.
Let's talk soon. Thank you.
You bet.